So today we're going to be looking at Plenti Group ASX PLT. This company is again in the business of doing personal loans to Australians, and we've looked at similar companies in the past like Harmoney, Fyzee and MoneyMe, so it only makes sense to review this company as well. So in this video we're going to be looking at the company's overview, its recent announcements, the share price, financials and my personal opinion on the stock. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, as usual, this video is not financial advice. I'm not a financial advisor. We're speaking in a very general sense only. Please do not use this video as a buy recommendation. Only use this video as a starting point for your own research. Let's get into the company's overview. So as mentioned before, Plenti basically gives out personal loans for debt consolidation, renovations, green loans and legal finance as well. Now this is basically when couples are going through a separation and they need to pay for lawyers, for family lawyers and other stuff as well. Now with green loans, I found this pretty interesting because not every single lender out there is offering these loans or even branding it as green loans, and these loans can be used for stuff like solar panels, home batteries, hybrid cars, solar pool heating and other stuff like that. Basically stuff that helps to benefit the environment. Now I'm not sure if you can notice, but Plenti has had a rebrand with his website recently. As you guys can see, it used to look pretty different before, and a fun fact about Plenti, they used to be known as RateSetter before Plenti, so there you go, just some fun facts. And RateSetter is actually a UK based company that started to open up its operations in Australia in 2014. Now with Plenti, they do things differently than other competitors, like allowing retail investors to actually invest their own money into these loans with as little as $10 and earn up to 6.5% per year, which is actually pretty high. Now of course, this does not come without risk. There's obviously risk involved, and the main risk is being default risk, where the actual borrower may miss a few payments or they might not pay the loan back at all. So when you invest your money, it is pooled together with other investors and lent out to credit-worthy borrowers, and then of course the borrowers pay back the loan and then you get paid based on that. Now as you guys can see on the left, essentially the longer you invest, the more you're going to get paid. So 1 month rolling is about 4.3%, then the 3-year income is 5.4%, and then investing for 5 years is 6.5%. So if you do want to earn that top rate, you do have to leave your money in there for about 5 years, which is a very long time, let's be very honest here. Now one important thing that I want to point out to you guys, if you guys are looking to invest using this platform, is the fact that when you invest your money, Plenti is lending it out to not just individuals but businesses as well, for loan amounts up to $500,000 as a maximum for businesses. So you do want to keep that in mind, because obviously businesses are much more riskier than just individuals. And from my knowledge and my research, I don't think that you as a retail investor, I don't think that you get to pick what you invest in. It's basically all pooled together and then Plenti makes the call. So just keep that in mind. So yes guys, it can be very risky and the returns are fairly good as well. And as of now, 100% of the investors have gotten their money back when it comes to defaults or even late payments by borrowers. But do consider the risks if you are looking to invest in this company, and I am not certainly telling you to do this, just do the research yourself. Now when it comes to mitigating some risk when it comes to retail investors looking to invest in Plenti, they've got a unique offering called the provision fund. So how this works is that each borrower, when they get a loan, they pay some money into the fund based on the risk. So if the person or business borrowing the loan has a riskier credit rating or riskier circumstance, then they do pay more money into the fund, and less riskier borrowers pay less money. And then if this said borrower does not make a payment or they default on their payment, Plenti can basically access this provision fund and reimburse you, the investor. So looking at this provision fund, it is sitting at about 190%, which means that it's nearly double the coverage and the fund is in good position should the borrowers were to default. Now I looked at this website about a year ago, sometime like late last year, and I saw the provision fund was sitting at somewhere around, I think, 142%. So from that point until now, it has grown quite considerably and looks like that it's in a pretty healthy position. Now guys, let's get into the specifics of this company, but if you found some value so far, please gently smack the like button or subscribe. It really does help out with the YouTube algorithm. Let's get into it. The 90-day arrears is quite low and it's down to 0.42%, which is one of the lowest arrears rates that I've seen, and it's especially worth noting if you're looking to invest in the company as a retail investor, either in the stock or through lending your money through the platform, because this ultimately dictates how much money you're going to get back if you were to invest and how much risk you're taking on. So on the 17th of November last year, they hit a huge milestone of $1 billion in cumulative lending, and the loan portfolio is currently sitting at about $450 million, with the 3-year KGR being 61%, which is pretty insane. Now Now when the next recent announcement comes out, I would be pretty keen to see what the numbers look like then. Now when it comes to the type of borrowers that this company has on their books, we can see that the credit scores are very high, and this is an Equifax credit score which is used by quite a lot of banks, and as you can see, the credit score is moving towards 800. Now when it comes to the big four banks and other prime lenders, they are sitting at somewhere around that 725 range, which to be honest is fairly good because the average credit score is somewhere around that 700 mark. But if you're touching close to that 800 mark, that is even better, so the company is doing good in that regard. Now, of course, if you are looking to compare Plenti with a big four bank, it's not the best comparison because the big four banks obviously have millions and millions of customers that they deal with. So Plenti, of course, has much less than that, but it is still nice to see nonetheless. Now, guys, if you are interested in looking at credit scores from an Australian perspective, I've actually made an in-depth video about this already. There should be a link in description and there should be a link somewhere on the screen as well. This video is my in-depth and ultimate guide to credit reports. Since I've worked as a mortgage broker in the past, I've looked at hundreds of credit reports, some good ones, some average ones, and some really bad ones as well. So I've seen it all, and this video has some jam-packed information as well. So go check it out. I promise you that it'll be very helpful. So speaking more about arrears, we can see that it did go up during COVID in the first quarter, and now we can see that it's coming back down again. And based on the next update that we can see, this should reduce even more as things get better anyways. Of course, this is just my prediction, but we are seeing more and more people going back to work and unemployment is getting better. So let's see what happens in the next update. But if you guys just have a look at loan deferrals, we can see that Plenti's loan deferrals are much lower than the industry experience average, so that's pretty good to see as well. So Plenti is looking to disrupt some markets, being the green energy market and the automotive market as well. As you guys can see, solar and renewable energy financing is growing pretty quickly. Now we've seen Hum do this as well, so it's good to see Plenti join in as well. Now based on my research, I haven't really seen any other company do this like Fyzee or MoneyMe, at least to my knowledge anyways, and since customers are looking to kind of stay away from the big four banks for the time being, it's good for alternative lenders like Plenti to come in and fill the demand. And the company at the moment is focusing on lowering the cost of funds because this ultimately dictates how much margins they can make on the loans. So having a look at some recent announcements for the company, on the 31st of March, they announced to the market that Plenti increased their automotive funding capacity to meet growing demand, which is obviously a very good sign. This was increased from 275 million to 350 million, and this is a good sign because we can see that the loans are growing and there's more demand from customers to keep on using Plenti. So of course they want to have the supply available to meet that demand to of course fund the loans. Now on this announcement, the stock price did go up about 2%, but then shortly afterwards it just went back down again. But yeah, anyways. But the real news was on the 12th of April when they announced massive growth. As you guys can see, they had record loan originations. Their loan portfolio increased quite a lot as well, over $600 million. And they also launched a new BNPL facility for renewable energy customers, which is of course buy now, pay later at 0% interest, similar to Hum, I believe. Now they're also looking to develop their tech platform even more by analyzing past applications that they've done. And of course, lots of competitors are doing this as well. So it's a pretty good move. And we can see that the arrears are down to 0.31%, which is even lower than what we saw before. So I'm very happy to see this because this is something that's very important if you are looking to invest in Plenti. And based on the news, the share price did jump up around 12%. People are of course very excited about this. Now the final announcement was on the 5th of May where they increased their warehouse funding facility from $100 to $200 million for especially renewable energy and personal lending. Now this is based on a big four bank which increased their limit to provide more support for renewable lending specifically because more and more people are looking to install solar panels to save money. So this is a great initiative, and on the news the share price rose about 5%. So a quick look at the share price for the company. This IPO'd in September 2020 and the return since then has been around minus 16.6%, which is not too good, and the return year to date is sitting at somewhere around 8% minus. Mostly the share price is driven by the announcement hype because we can see lots and lots of spikes in this period where the share price goes up pretty rapidly but then returns sharply downwards as well. And I suspect that we'll see this trend keep on continuing for the short term or maybe even the medium term until we see some sort of a major breakthrough where the share price jumps up and then kind of normalizes around a new support. but we'll have to see what happens. Having a quick look at the financials for this company, starting off with the profit and loss, we can see that the revenue has increased from about 18 million to 24 million, as you guys can see, and correspondingly the funding costs have also gone up from 9.6 to 12.8, and this is pretty expected because as more loans go out, they need to borrow more money to keep on funding that. And then admin expenses have gone up quite a bit as well, and there's no note here, as you guys can see, so I'm interested to know what this is all about, because this has more than doubled from like 4 million to nearly 10 million, so that's quite a huge jump. But looking at the overall income position for the company, the loss is slowly decreasing from 7.4 to 6.8, so they are slowly moving in the right direction. Moving on to the balance sheet, the main standout for me is the cash, because this has gone up from 42 to 93, and this has basically more than doubled, as you guys can see. And this cash figure is made up of $12.5 million, which is the provision fund, so we can ignore this figure because they can't really use this provision fund to expand their investments, because this is kind of like the investors' money in case the borrowers were to default. So despite that, they do have quite a huge surplus for cash at around $80 million, which is quite huge. And looking at the overall equity for the company, before it was negative at about 6.5, but now it's gone into positive at about 53 million, which is of course moving in the right direction. And this is very important because this company is making a loss at the moment, so having a strong cash balance, as we saw earlier, is very crucial to ensure that this company can stay afloat. So having a look at the cash flow statements for the company, we can see that the operating cash flow is mostly positive, and it's gone up from 17.8 to 24 million in terms of the interest income that these guys are getting. And the cash from operating activities has gone from a negative to a positive. So once again, I am pleased to see that as well. But if we break down this income even more, looking at this figure for the other income of $2 million roughly, this is mostly made up of government rebates. And if we look at the JobKeeper payments that this company got of like 1.5 million, if we actually remove these two figures, the operating cash flow is still negative technically, but nonetheless, for the next few reporting periods, as the company recovers from the COVID period, we should start to see more of an improvement. This is just my prediction anyways, but let's see what happens. So for the company, most of the cash did come from shares and debt, as you guys can see, but as we said before, they do have quite a lot of cash available. So what is my opinion on the company? Let's talk about it. Now guys, I always say that when a company is making a loss, buying this company is going to be a speculative play. So if you are looking to invest in this company, do so at your own risk. But we have seen that this company is growing at a pretty fast rate based on the loan originations and a massive KGR of like 60%. So when it comes to differentiation, I do like the fact that they do have a provision fund which allows investors to get reimbursed if the borrowers were to default on their investment. So it's a good strategy to do that. And I also like the fact that you can start investing with Plenti with as little as $10. And this really removes the barriers to entry for people who just want to enter in this market. They're also engaged in ethical investing, which is again a mega trend that we're gonna see only grow in the next couple of years and decades. So it's good that they're taking advantage of this opportunity. But in terms of other competitors like Fyzee, MoneyMe, and Harmoney, I'm not too sure how well this company compares to those three competitors. Those guys are moving more towards financial wellness, and I feel like personally that is a better option when it comes to differentiation. Now that's just my personal opinion, but let me know your thoughts on the company. Since Plenti has only recently listed on the stock market, only time will tell how this company is going to perform in the future, but for now this company is going to remain on my watch list. If you want to check out some other competitors of Plenti, this playlist includes full analysis of companies like Fyzee, MoneyMe, and Harmoney, so check this video out. And this is my ultimate guide to credit scores for Australians. Check this video out as well. And guys, thanks for watching. Please like and subscribe, and I'll see you in the next one. Bye now. To invest in this company, so if you